Welcome to The Explainer. Today we're looking at what might just be the ultimate scorecard for the AI revolution. We're unpacking Micron Technology's historic Q3 2026 earnings report. Because if you really want to know where the whole artificial intelligence boom is headed, you have to look closely at the hardware powering it. As you'll see today, Micron's latest financial numbers are absolutely staggering, and they tell a fascinating story about the sheer scale of the global shift toward AI.
Okay, let's dive right into this. Here's our roadmap. We'll start with the $41 billion quarter, move into the AI memory supercycle, get DRAM and NAND explained, look at some strategic customer agreements, and finally ask if we're ending the boom and bust cycle for good.
All right, Section 1. The $41 billion quarter, a historic leap in tech revenue.
So we're unpacking a financial turnaround story here that is literally nothing short of dramatic. But before we get into the heavy numbers, let's just ground ourselves in what this company actually does. Micron Technology is an industry leader positioned right at the very center of the data economy. Every single day, their innovations are fueling advances in AI and compute-intensive applications. We're talking everything from massive warehouse-sized data centers all the way down to your mobile device and your car. Micron provides the essential memory and storage solutions that just make modern computing possible.
Now, brace yourself for this number. 345.7% year-over-year revenue growth. Yes, you heard that right. Growth of this scale is practically unheard of for a massive hardware company. To give you some context on the profit side of things, their net income went from roughly $1.89 billion in Q3 of 2025 to over $28.2 billion in Q3 of 2026. This isn't just a good quarter, right? This is a complete paradigm shift for their business.
And this brilliantly illustrates the sheer magnitude of this blowout quarter. Back in Q3 of 2025, Micron brought in $9.3 billion in revenue. Fast forward exactly 1 year to Q3 of 2026, and that number has absolutely exploded to $41.46 billion. Just to add to how crazy this is, that represents a 74% increase from just the prior quarter alone.
Moving on to Section 2, the AI memory supercycle, and why AI needs massive memory.
So what exactly is driving this astronomical growth? You know, when we talk about AI, the conversation almost always revolves around processing power, specifically GPUs. But here's the thing, processing power is entirely bottlenecked if it can't access data instantly. AI requires staggering amounts of incredibly fast data storage. The memory simply has to keep up with the math. As Micron's president and CEO, Sanjay Mehrotra, summed it up perfectly in the earnings release, he said, Micron's record fiscal Q3 financial results and even stronger outlook for Q4 reflect the strategic value of memory in the AI era. Basically, what this tells us, and what the data absolutely confirms, is that this hypergrowth is a direct result of AI accelerating memory demand at a rate that is vastly outpacing the entire industry's ability to actually increase supply.
When we break down the revenue, it's wild because every single business unit at Micron is surging. Cloud memory hit $13.76 billion. Core data center and mobile/client both brought in over $11.5 billion each, and the automotive and embedded sector reached $4.63 billion. The crucial takeaway here is that this isn't some isolated spike in just one trendy data center sector. We are witnessing a massive, broad-based demand surge across all platforms, from enterprise servers straight to the phones in our pockets.
Okay, Section 3. DRAM and NAND explained. The engines of data storage.
Let's step into the engine room for a second and demystify the actual products generating these tens of billions of dollars. You're going to hear two terms constantly when looking at Micron's output, DRAM and NAND. Here's the simplest way to think about them without getting bogged down in dense engineering jargon. Think of DRAM as the short-term, incredibly fast-thinking brain of a computer. It's high-speed, volatile memory meant for immediate data retrieval, which makes it absolutely perfect for feeding heavy data to AI processors in real time. NAND, on the other hand, is the long-term storage. It's non-volatile flash memory, meaning it securely holds on to massive datasets even when the power is completely turned off. Modern AI servers need vast amounts of both to function effectively.
Looking at where the cash is actually coming from, DRAM represents the massive lion's share of Micron's revenue at $31.3 billion, while NAND pulled in nearly $10 billion. Just to put that in perspective, DRAM sales grew a mind-boggling 343% year-over-year, and that was driven heavily by an approximate 260% increase in average selling prices.
And because overall market demand is drastically exceeding the industry's supply right now, Micron has gained some incredible pricing power. Just look at this figure. An 85% gross margin. A year ago, in Q3 of 2025, their gross margin sat at just 38%. This massive jump is the direct result of constrained industry supply colliding with an insatiable AI demand. It creates this highly profitable environment where Micron can basically command top dollar for the memory components they manufacture.
Section 4. Strategic Customer Agreements and how they're rewriting the rules of memory supply. Now, what's really interesting about this slide is that it highlights arguably the most crucial forward-looking revelation of this entire earnings report. We're seeing Micron actively rewrite the rules of memory supply to build a massive economic moat around their business. What is so fascinating about these new take-or-pay agreements is how fundamentally different they are historically. Memory supply commitments in this industry were usually negotiated on a pretty fluid one-year basis. But now, Micron is securing binding contracts with guaranteed volumes and fixed or minimum pricing over multi-year terms. Customers are so desperate to secure long-term stable memory supply for their AI roadmaps that they are willing to completely lock themselves in.
And the numbers behind these agreements are frankly staggering. Micron has signed 16 long-term agreements spanning from 2026 all the way to 2030. These contracts represent about 20% of their projected DRAM volume and 30% of their NAND volume. This translates to $100 billion in remaining performance obligations, which is essentially guaranteed future revenues sitting right on their books. And they have already secured roughly $22 billion in cash deposits. I mean, this locks in tremendous financial security and visibility for the company over the next 5 years.
And that brings us to Section 5, ending the boom and bust. Are we looking at a permanent shift?
Historically, the semiconductor industry, and the memory sector in particular, has been famously cyclical. Prices crash when there's oversupply, and they rocket during shortages. But we really need to look at the long-term implications of everything we've discovered to see if that history is even relevant anymore. The forward guidance shows this current momentum isn't slowing down anytime soon. For Q4 of 2026, Micron is forecasting an incredible $50 billion in revenue, with approximately 86% gross margins. So the growth trend continues to accelerate and is being driven by these massive locked-in contracts and the relentless global expansion of AI infrastructure.
Which leaves us with this final, really provocative question. Has AI permanently broken the memory boom and bust cycle? When you have $100 billion locked in through multi-year agreements and a demand curve that shows absolutely no signs of flattening, it really appears the foundational nature of Micron's cyclical business might have fundamentally changed forever. The AI era isn't just a hardware trend, it's a structural shift in how data and memory are valued globally. Thank you for joining me on this explainer. Keep this question in mind as we watch the tech landscape continue to radically evolve.